I'll kick it into gear.
Good deal.
Hello traders everywhere, Adam Houston here, co-founder of MarketClub with your 1 p.m. market update for Monday, the 31st of October. Trick or treat, Halloween, whatever you want to call it, the last day of October. Well, certainly this was a trick on the markets with some big news out today. But the first thing was Governor Corzine, ex-Governor Corzine, bets big on sovereign debt and loses. That's the big story today. If MF Global declaring bankruptcy based on their sovereign debt exposure, how can one brokerage company, which MF Global basically was spun off from, become a sovereign debt player to the tune of $50 billion? Well, it's all about leverage and huge egos. In this case, Corzine's ego. Former governor of New Jersey, Jon Corzine, basically made a huge bet at the derivatives table and lost. This is what happens when you have egos get involved in the markets over common sense. In today's video, we're going to be looking at MF Global and show you just how our trade triangle technology, we're giving you clear and concise signals that all was not well with MF Global. And this was months and months ago. I'll show you that in the video. As many of you know, last week we were criticized for not getting super bullish on the financials as it looked as though they had broken out. As we stuck to our basic beliefs that, according to our trade triangle technology, the financials hadn't broken out to the upside. Having a disciplined approach by far and away is the winning strategy to have in today's markets. You may recall in some of our comments last week, we go from a world that is coming to an end to instant euphoria. Well, things don't change quite as fast as that in the real world of trading. The overall trend continues to be negative in the equity markets. The overall trend in the gold market continues to be positive. Okay, now let's go to the charts and see how we can create and maintain your wealth in 2011. So let's go to our portfolio manager, which we are going from my homepage. And by the way, we have our show this Wednesday. Be sure to call us and we'll take a look at that and see if we can't get you involved with that show on Wednesday, this Wednesday at 5 o'clock. So let's go to our portfolio manager, and we have got, starting with, you can see right here, you can see the numbers 60, 60, 75, 70, 60, minus 100. Well, guess which one that is? That's going to be MF Global. We'll get to that one last. But let's start off with the equity markets, and we're going to be looking at the last 3 months. And you can see this is what I was concerned about on Friday. This day here, like a little doji line. Not a good sign that tells you it's an equilibrium between buyers and sellers. And the fact that we came out of the Donchian trading channel quite dramatically on Thursday with the big emotional move to the upside. Today's action is a little bit more subdued. Obviously, the MF Global story is dominating the markets. Now, as it gets longer in the day, if this market fails to rally, there'll be a lot of folks, I think, getting out of any long positions they had from this level here. Now, moving our trade triangle technology, you can see that here's our weekly signal at 12:20, basically saying get out of any short positions if you're an intermediate term trader. And if you're still a long-term trader, you should either be short this market or just out of it in cash. That's the bottom line. But the triangles give you, as I mentioned, a discipline, a source of reference point, when to get in, when to get out, and when the market's trending really well and when it's not trending well. And I can take you back in this particular market. Let's just go back, let's say a couple of years. Let's say this is probably good. And what I'll do is take some of the stuff off the Donchian trade channels, the parabolics. So we just get a very, very simple. I'm just going to put our monthlies in there, and you can see there's the buy, clears day, exit right here, and we still haven't had a signal to get long this market. The market's telling you something. We've had a big move up, obviously one of the biggest moves in history, but is it over? Or has it topped out? I think it's still too early to tell, but generally speaking, I would not be surprised to see this market be more on the defensive and come in line with the longer-term trends of our trade triangles. So let's go to our next market, and the next market we're going to go back to is going to be the silver market. And the silver market is very, very interesting, as that has a similar formation. See the doji line right here. It's a long-legged doji. Basically, this is Sunday's action. As I said, these markets trade 6 days a week in silver, gold, 6 days a week. So you've got to be prepared to be in these markets and understand they do trade on weekends, and surprises can come like they did yesterday on Sunday, at least Sunday in our time zone in the United States of America. So here we are. The market action looks a little bit defensive. Certainly this is an interim top. The 36.77 level, which is right around there, is a 61% Fibonacci retracement. We talked about that on Friday. And it's simple to draw these retracements in here. You can just grab here, drag this down to the lows, and you can see the retracement levels we talked about. Here's 37.16. I think we may have gone from the previous high. It doesn't make a lot of difference, 36.56. So pretty much these levels are very close to where we're talking about. Also, if we put if you go on our chart studies, put our Donchian trade channels, you can see we just popped out of the trade channel there. Now, is the market going to go higher or lower? It's still a little too early to say, but generally speaking, I'm going to go on our long-term trade triangles, which are short from 33.15. The market's, I know it's higher, and you can look at this, well, why are you still short? Because the markets haven't told us they're going to go, they haven't turned up yet in a convincing fashion. You've got an intermediate and daily trade triangles that are positive, but that's in conflict with the longer-term trade triangles. So let's go to our next market. And we have actually a bonus market this time. We're going to be looking at another market, another metals market, which is very important. And this is the gold market. And look at the difference here. You've got our monthly and weekly positive. The daily is still just turned to negative today. As a matter of fact, you just put that in. Boom, you can see there. And you can see basically, these are dynamic. We do this dynamically during the day. And you can see it's from 1706, the market's at 1719. Again, this is not a particularly robust move on the downside, but certainly the 1700 level you can see right here is going to be very, very key. That's where the previous resistance was. And you know, we've talked about this. And let me put my telestrator on here so we just visually show you what we're talking about. We've talked about this in previous reports, but basically this was you can just simply draw a line. I'm just going to freehand this. Let me just turn this off right now. But basically just draw a line right across here. So this was resistance. This is now support. If we come through this support, which is 1700, which is a very important level in my opinion, we could possibly come back into this broader trading range that we've seen earlier. So just pay real close attention to 1700 on the spot gold market. So let's clear the chart, go to our next market. And the next market is going to be the special market we talked about, and that's copper. We've included copper this time because we know it's a very important economic indicator, and you can see how this market, even though it's come back from the lows of the day, which was the low was 3.56, we're coming back with 3.6385, but nonetheless, it looks potentially like we're rolling over a little bit. And I think if we go down here, you can see that the indicators here are just not super bullish right now. This is bullish, by the way, but again, our longer-term trade triangles, similar to the silver market, negative longer-term, intermediate and short-term are positive, so they're just beginning to look to be turning around. But the interesting thing here, and this is what I want to share with you, and this is why there's Fibonacci numbers, we keep talking about them, and probably driving everybody crazy, but they really do work. So we'll take it from this level right here up to the highs here, drag this down to the lows, and look where this stops. I mean, that's pretty amazing. These are levels that you could have put in really from this date on, and this is basically the 3rd of October. You could have had these levels. So that was the area that stopped the market. I think we'll probably see more trading range. We are showing, let's just put our trade triangles back in. We're showing a plus 70. So if we get to a 65, we're in a sort of trading range type now. So I would really be cautious about being long the copper market if you're a long-term player. So let's go to our next market, and that's going to be crude oil. And crude oil has had that problem around the 94, 95 area. We've talked about this. Again, our signals are somewhat mixed. Longer term, we're short from 95.79. you should be short or out of the market. Interim markets 87.48 and daily 88.89. Now this is the area I thought would be a problem for crude oil, and that's right sort of this level here. Oops, let me just take this off. And it's right around here. This is, oh, hold on, sorry guys. It's right around here and going up to 100. So this to me is like a zone this market's going to have a hard time doing. Now, this market has actually tracked very closely to the S&P 500. The S&P 500, as you know, today is under pressure because of the bankruptcy filing from MF Global, and I would think this market could potentially roll up. But you also have, you can take your, let's just clear the screen again, and let's just go to our trend line tool, which is right here. Click here, gives you a little yellow box on the left-hand side, and you just go from the lows and drag that up. So I would say the 90 level is going to be very, very important this coming week. If we close below 90, I think you'll see more of a pullback, possibly to the 84 level, 82 level. So there again, you can use your Fibonacci retracements just from the highs and just reverse that down to the lows, and you can see we could possibly get to the 82, 84 level. So I think that's something to look at. Certainly the previous low right here was 84.22, and we could go back and test that level. So, but the key level is going to be 90 if we close below that. So let's pay close attention to that level this week. Now, the big news here really was the dollar index, which we thought the 76 level was going to hold. It actually pushed it down on the exuberance on Thursday. As you see, no follow through on Friday, and of course this is Sunday because we trade the dollar index on Sunday, and today's big move up indicates that this is an important low for this market, and I think that's one of the things I would look at. Now we could also track our Fibonacci going from the highs to the lows. Same, we could get back to the 77, 87 level, 77, 27. So certainly the 77 level is in our sights here, which is not too much higher than we are right now, but I think it's going to take a little while to do. Also, you can take this off the screen and we can draw a trend line from the highs quite easily, just dragging this down, and you can see if we close at these levels or possibly higher tomorrow, you're going to break that, and you could be looking at the 77, 77.50 area as a target zone. So very, very, very interesting market. We have gotten, if you scope this down even further, you can see the market is a little bit of a bullish divergence on the Williams %R, and also you're coming, this is a very important trend indicator, the MACD, the MACD sometimes called. You can see it's been losing momentum here. If the blue line crosses the red line, and it could do this week, it would indicate that this market's going to have a move similar to what took place right here. And you can go back and you can see the move is pretty substantial. So let's pay close attention to that, the MACD, and also our trade triangles, because they are mixed. We've got a weekly down, which is the only conflict here. If the weekly turns positive, well, which you could do, it may take a little while, but if it does turn positive, then I think we've got something going on the upside with the dollar. The dollars are the only game in town. Certainly the euro is getting killed today in the global FX markets. Let's go to our last market, and this is the market I want to hold back for you. This is MF Global. Oh, excuse me, the Reuters-Jeffries Index, I beg your pardon. And if you remember the Reuters-Jeffries Index, we were talking about a very, very important level in this index today, and that is the Fibonacci retracement level, which we saw in this market, and that is coming in at 324.97, which is right around these levels here. You see how that market just stopped dead, and as I said, we've told you about this, we've shared this with you, so it shouldn't be a surprise. You simply draw from the highs here, in this case right here, drag this down, and you can see where it stops. So this is definitely an area that the market is going to have problems with. We alluded to that last week, the fact that it was out of the Dungeon trade channels, Fibonacci number, probably overbought. I'm guessing if I go down here, yep, overbought. So a lot of potential problems for this market. Certainly today's action, not positive. This level is going to be very, very key in my mind. The level that was seen, I guess this is on maybe this is on the 26th of October. The low is 315.98. If we close below that low, I think we put in a top and we could see this market come back down and test the 305 level. Again, this is going to be very, very contingent upon the price of crude oil and also on the equity market. So let's go to our last market. This is what I promised you before. We're going to be looking at MF Global. And I'm going to scope this out a year. And you can see right away here, this is our first signal on MF Global, and I'll take this off the screen, and you can see on March 15th of this year, March 15th, not last month, not the month before that, but 8 months ago, it's $7.88. That was the signal that something was wrong with this market, and look what happened, all the way down. All of our trade triangles were negative, and this is the difference between trading on a disciplined approach as opposed to saying, okay, this stock is cheap here, I think I should buy it. It's cheap here, I think I should buy it. This happens, it's happened before. It happened with Enron, it's happened with Netflix, it's happened to a lot of major markets where things do change and people know about it. People on the inside of MF Global, I'm convinced, knew that sovereign debt was a disaster for them and they weren't going to get out of this program. So I think that's the important lesson to take away. Don't trade ego, trade discipline, trade with the trade triangles, and you will come out ahead and make money. So, hey, this is Adam Hewison. I'm very happy to be back. I hope you guys have a safe and happy Halloween. If you haven't seen our Halloween video, our monster video on the blog, take that, take a look at it, and we'll be back tomorrow with some other updates for these